No, I'm just waiting for, I guess, it to go live. Alright, looks like it's starting. No, I'm just. Alright, everything's working. So in this video, I'm just gonna talk about how I go about creating a morning watch list, finding stocks in the morning that I think are gonna be potential movers based upon a couple different variables. So here we go. The first thing I do is I go to Market Watch because this is all once again using the Thinkorswim platform. So Thinkorswim actually has a pretty cool feature built into it that if this was pre-market, it's not. It's actually 9:03 at night, so this isn't gonna work right now. But if it was, in the morning, tomorrow morning, it would. But basically, you would go to Market Watch. And come down here to lovers and losers and just go to pre-market movers. So once you do that, this screen will load with all your pre-market movers. Now this is where I start building my watch list from and determining whether or not I'm going to follow the stock, during pre-market and or after the bell. And I'll explain all that in just a moment. But you can also do, this is for pre-market, so you can also do a scan. This is my scan for pre-market. I keep it very simple. I mean, there's scans out there you can YouTube that are going to give you like studies and everything. I use those on the chart. On the charts. So basically, the first thing that I do is I change the two filters rather, for the scan that I would like. Because like I said, I keep it simple. First one is going to be filter is going to be a stock filter. So you just can put, last, and I'd like stocks between 10 cents and $10. And then the next filter is just volume. Generally, in my intraday scanners, this is going to be 100,000, but for pre-market, I like 5,000. And here, I don't want a max, so I usually just put all 9s. And then you want the max to show all 2,000. Hit scan. It's going to always come up saying, hey, you're asking for a large number of scans. You sure you want to do this because your computer can start acting slow? I mean, I've never had it happen, so I always ignore it. And then what I usually do is I just, you have all of these headers up here. I always come to the first one and it's just go by percent change. The highest percentage. Now, if you see some crazy ones, like 1,000%, 177%, they're usually like, like the micro OTC caps or reverse splits. So once you skip all those and you start seeing, high volume percent changes, like this was, I think Matthew actually told me about this one, but I didn't see any news on it, so I'm going to move down to the next one. So basically, if this is pre-market and I see something gapping up big, what DCIX is moving, interesting. Oh wait, that's DCIX. I was thinking DCTH for some reason. But nevertheless, what the way I find out whether or not, hey, look, this is going to be a stock worth watching or not, is I usually just go right-click, go to more info. Chart it real quick, and as I'm charting it, I look down here. Okay, look, so this was pre-market on the 17th right here. They did have some news. They said they were up 17.14% gains. It looks, oh wait, no, never mind, sorry. What was the news? Oh, this was just a low float play. So this wasn't really any news. So what I would have done was I would have just kind of maintained it. I wouldn't have really played this because there wasn't any news. This was just a low float that just took off right off the bell. Looks like 515 straight to a 929. I'll explain how I look for low floats as well. So I'm gonna go back here. So basically what I'm doing is I'm going through these and I'm looking for, instead of doing the pre-market, because it isn't pre-market, I'm gonna show you what if it was like an intraday scan. So basically, scan this by changing to 100,000 shares, and that should like filter out all the garbage stocks. Code. So I'm gonna percent change it to the most gains, MICT. So let's go with that one. I'm gonna go to just more info, look at the chart real quick, and yep, looks like, so if you look right here, and let's go to the chart. All right. Okay. So on the 17th, in the morning, it looks like they released some news that said they got a new order of $1.9 million. So, that was pre-market news. So what I would definitely do is, oh, 1 minute. So what I do generally is, this is pretty decent news, right? So, but if you look, right out of the bell, it went down. So I wouldn't have jumped right into this, even though this news was good. If you jumped into this pre-market, yeah, you would have made money, but you would have, risked, because you could have gotten right here in pre-market, and it then really been bummed out because you see it just kind of falls, and you might even got real scared because you could from 95 cents straight down to 84, and even as low as 80, and get scared or you stopped out. So I wouldn't have done anything there. Typically what I do with this is, because this is pretty decent news, so this would have been my play right here. I would have just taken a price point. This is the high of the pre-market right here, right? You see this. So this gray area signifies pre-market on the 5-minute scale. Let me just make sure I'm in the right, yeah, I'm in the right area. So I go to the high of pre-market, and I put a price level there. And so this is the high in pre-market. So then what I look for is a breakout. A breakout in above the high of pre-market. And then what I do is I typically look at the level 2 at the same time to see if the volume is there. If I see the breakout, then I'll typically buy into it. But obviously using some other studies. But my key on this is, okay, look, for this stock, we do have some good news. Obviously, news like FDA approvals and things like that are super good earnings, where the guidance is shot up, and, or a partnership or merger news, though. I mean, all news is different. And there's some news that might sound good but have absolutely no bearing on the price of the stock movement. So you just kind of got to learn to read the news. Whereas this one, I mean, $1.9 million for a, not a micro cap, but a small cap stock, seems like a pretty decent, order to me. Now, without knowing their fundamentals and how much their revenues are, I really can't say much. But I am willing to at least say, hey, look, if this breaks the pre-market high, I'm willing to look at it. But then I also, I go out even further. So what I'll do is I'll go, let's just say, 30-minute, and I'll start looking for the support and resistance. So I've already got the pre-market high listed right there. So it looks like it's already gapped up pretty well over the old resistance, which was right here. So the resistance, if you look at right here, was at 84 cents. That's going to be the now solid support in a longer time period. And then that same day, looks like the new support, I would say my stop loss, if I'm entering on a breakout right here, 95 cents was the high in pre-market, it looks like. That's why I drew my price point. My stop loss would probably be right here, where these bars, this looks like the support right here. So if this support breaks down, then yeah, I would probably stop out. But if you look at this, so this is a 30-minute candle frame. So if I bought out in this pre-market high of the pre-market, and looking, going back in history, it's well above any former resistance. There's nothing there, so this is now the new support. Well, I wouldn't say support, but momentum play rather. That's the best way to say it. I would have bought, let's say 209, 210. I mean, 209, 210, 95, 96, based upon what the level 2 bids and asks were. When I see a super strong bid, that's when I know that there's a push about to happen. That means either an algo's kicking on, or there's some big buyer coming in, and or a market maker coming in that's just about to push things to the next level. And if you look right here, getting in at 95, 96, let's just go back to the 1-minute time frame. So 1-minute time frame, you would have probably purchased right here in the 95, 96 level, kept your stop loss right here at maybe, I would have probably kept my stop loss at 85, I think. Yeah, 85 is where I kept my stop loss, because it looks like where the base is. So if it goes below 85, you want to, call it, just call it a loss. Now remember, you can't see anything to this whole grayed out area in a live trading day. You cannot see. So all you are seeing is this green candle forming and a breakout happening above the high in the pre-market high. So what I'm doing right here is, okay, based upon the volume that's going on, which looks like this volume bar is pretty good, I said, wow, okay, time to get in. And if you look, these are all lower lows. They're all creating lower lows. It's like an ascending, I mean not ascending, but yeah, like an ascending staircase, so to say. But and I'll talk about that another time. But going back to this simple aspect of what I look for in a quick pre-market move out based upon news is just find a price point to break out of. Usually pre-market highs are what I look for, and then once you get there, this is not using Fibonacci's or anything. This is a straight momentum scalping play. I feel like for the challenge, this is probably what I'm going to be doing a little bit more of versus doing the Fibonacci's. I'll do Fibonacci's on like major news runners, like for example, or like DCIX. I mean, that Fibonacci worked like a charm on that one, just because Chipper Friday with tons of volume. There'll be exceptions on where I do it, but this right here I feel is going to be more consistent in terms of profitable trades. So going back to this, so my stop loss would have been right here. So entry right here, stop loss right here. This is 85, right? So let's say I entered right here. I'm just watching it, and even right here from, I'll be honest with you. I would have probably sold right here because in small cap, $1 is a major resistance. It's always a major resistance. Excuse me, major resistance. So I would have probably sold right here for a quick profit. There's no doubt about it. I would have never made it to right here for the high of the portion we're seeing. So and it even goes much higher than that towards the end of the day. Now there are studies you could have probably seen to gauge this, but for momentum play, I would have definitely got in. Oh wait, I'm never mind. I got in 96 cents, 97 cents. I probably wouldn't have sold for $1. For some reason, I'm thinking my price point entry was at 85. But that was my stop loss. I would not have sold here. No, it's too much of a, unless it's a big position like $10,000, $12,000 worth of shares. Yeah, I probably got out just because that small movement does equal big gains in that type of capital. But for the challenge starting out at 1,000, I probably would have not got out. Just rode it until I see coming to the 85, which I don't see, and then literally, what is this? This would have been in the 936 candle, and then you start seeing the real breakout happening at 959, and it just keeps going. And let's just see if I would have just rode it into the day. Yeah, it looks like it would have been stopped out because 85 does get touched right here. Now I don't know how much of the 85 was touched. It looks like it was maybe a shakeout. But that 85 looks like it was a solid support. So the stop loss call on this would have been good because, and once again, I did the stop loss because right out of the bell, remember, you can't see anything over here. Whoops, sorry, let me do this better. This whole area right here that's gray in a live trading day, you cannot see. It's the future. So I'm basing all my information off of the past, and all I can see in the past is right here. Is right here is all I can see. Remember, this is the momentum breakout. I wanted to buy at that breakout above the high of the day, or high of the pre-market, excuse me. And I needed to figure out what my stop loss was going to be. Now looking over here, I seen, okay, this looks like it's solid base. It touched it a few times. Looks like this candle broke over, but it immediately shot back up. This is like what they call, I don't want to say shakeout, but similar. But nevertheless, you then you even see this cup and handle formation forming, and it just kind of goes so forth. Now at 95 cents, I would have probably been out with a 10-cent gain. 110, I'm probably happy, especially up here. Yeah, I would have probably got out 110. I keep simple gains, especially because it's not about how much dollars you make. It's never going to be about how many dollars you make. It's always about percentage. You make 8%. 8% is great. 8% on $100 is $8. Guess what? $8 is great. If you have $100 in capital and you made $8, give yourself a pat on the back. 8% is a great gain. Don't let anyone tell you otherwise. Going for the 20 to 50 to 100% gains, yeah, those are absolutely amazing, but are they consistent? I'd like to believe not, because if they were, then you'd have some pretty rich people here all over the place, and they'd be able to teach everyone exactly how they did it. And don't see that happening too often. So my thing is keep it small, keep it consistent, so you can lock in gains. So once again, I'm just going to go over this one more time. So all I do is really just go down, create these little filters, keeping it simple. I mean, for pre-market, I don't really even use a scanner. I go to their little built-in thing, go to Market Watch, Lovers and Losers, and go to pre-market movers. When I'm in pre-market movers, I just sort it by the mark percent change, meaning the price percent change, and then I just go through that list. It looks similar to this right here, and I just kind of go down it and just right click on them and just go over here and just quickly chart it real quick, and then I just look for news like right here. This is a strategic financing. That's decent news, but I mean, see what that looked like. I mean, I'm just picking random tickers, and I mean here the volume doesn't look that good, but if you look once again, the pre-market high was right here, 159. During the first 5 minutes of the opening bell, it dipped below 159, dipped to 157, not too many more, but then it went right back up. So I would have probably just said, hey, you know what? But this isn't. The volume doesn't look too appealing here. It's very, very minimal, so I don't know if I would have actually played this one at all. I mean, probably not. So going back to the scanner, I mean, like I said, I in the morning, obviously you get the news, you play the news. Now with the why I'm telling you this is because a lot of you guys have platforms like Robinhood, and you might even have a platform that just is a major one, but it's restricted to where you can't trade pre-market. It might not be a margin account, so that's why I tell you guys this, because you can use pre-market to kind of gauge where you want to trade for that particular ticker during the day. So let's see. This was a good one, I think. I think this one had news. Yeah, this was this one. Yeah, I think I did this one right here. So this one right here had decent news the day before it. In what did I look at? I remember what was so appealing. Oh, this is interesting. Oh, right here. So I'm looking at the 5-minute time frame, which is just the past couple days, nothing major. But if you look at the 5-minute time frame, you're going to see something pretty clear. Pretty big resistance line. You see this? I mean, you can see this resistance line that they touch it right here, and again right here, and then boom, this resistance line is broken. And why am I showing you this resistance line? Because if over the period of the past 3 or 4 days, you can see a clear resistance being built and a drop, and then what you look for on these drops is where the clear support is being built. Now here it's not really a support that's being built, but a trend line that's going being made. So you can even draw it out like from the low right here all the way and just draw this trend line. Apparently this is the trend line going, but I wouldn't consider this the most accurate trend line. I'd probably draw it from here to here now because of the gap, but nevertheless, so ignore the whole thing about the trend line because it's just gonna make it more confusing. So once again, I had established this resistance right here, and then what happened during pre-market? It started touching that resistance, and if you look, I mean, let me just talk about it. This is the resistance, 208. The whole trading day, I think the high was what, 197, didn't even come close to 208, and then all of a sudden it starts, you get some movement and it's touching 208, major resistance. So I'm saying to myself, what? So then I kept this on and I created a watch list. So then I create these price points, and then I'm like, okay, watch for the breakout because 208 is a major resistance, right? Then what happened? Broke out right here. At 20 minutes into the trading day, you see a major breakout. Now let's go and break it down to the 1 minute and see how that happened. So on the 1 minute, you have the 208. You see that it was touched during pre-market, but then all of a sudden, it's dropping. You get a low of 184. But then, now using my other studies, I'm almost positive you're going to see a green arrow. You're going to see a MACD crossover. You're going to see the zigzag. You're going to see all the indicators that's going to tell you to go long. For me, the major one would have been the break of 208. I don't usually play these type of plays on news until I see the break because, well, actually I shouldn't say that. It's a variable of things, but let me just see what will happen if I... Yeah, look at that. These are the studies that I use. So let me just get a major green arrow, the green candle, blue for the upside, followed by the green. And this looks like. Well, it crossed here, never really crossed there, but you can see the clear dividing right there. So to me, that would have been a clear movement. I would probably did if I was market buy-in if I was using this set of studies, but I would have probably wouldn't have really bought in because I'm always scared that these things are getting rejected at the VWAP now or the legacies. So I probably wouldn't have used these studies and bought in because I'm always, waiting for the breach because you don't want to be on. It's very hard to call the VWAP breaks. In other words, it's very, at least for me, it's difficult for me to figure out which one of these momentum plays is going to break the VWAP. You always want to be on the right side of the VWAP when you're trading because now look, it's trading above the VWAP, so as long as you're above the VWAP, you're good. But once it breaks that VWAP, you don't want to be long because then you're going to be fighting that uphill battle, which it never really broke it. So once it broke that VWAP right there, it stayed above it, which is good. So me, I would have purchased right here at the 208 in a momentum play. I would have probably had a second monitor showing these studies right here, and when I would have seen the 8, the 9 on the sequence counter, and that's at 208. But then what would have happened was this Bollinger VWAP band was right there. I would have seen the candlestick going out of the VWAP band. I would have probably had a sell order for right there at the VWAP band or close to it, probably around 230 or 240. I mean not 230, but probably right around 240ish. I would have probably had it sold for. Went up as high as, what was that, 245. I'd have probably sold it around 240 to 241. If I would have had side by side studies going. So once again, let me explain what I'm talking about. I'm just going to explain it one more time what I'm talking about. So this is one set of studies that I use. These are no studies. This is just a standard chart, no studies. What did I do here? I simply looked at, the past, few trading days. I hate having to switch. And I've created a set defined level of resistance. And what I noticed during this pre-market, and you can even, when you're studying, because you always want to study charts and kind of figure out for the upcoming week what you kind of action plan you're going to have. And for me, I look at stocks that have, upcoming earnings and things that might be a catalyst coming up. And this one has been popping up on a bunch of chat rooms, and I don't know what really brought it to my attention, but when I seen this 208 and then I seen that it was touching it, I would have created an alert right here for like 210, but I didn't. This one I started researching after, today, literally today, when I seen it come up on a couple of boards. And this is how I would have played it, though. I'm just using this as an example just to show you guys, but I would have looked for news, and I had news right here on the 16th, and on the 16th I would have established that was this trading day right here, and the pre-market high for that day was at 181, and it broke that right off the bell. So you can 182, 183, jump right in, sold it or kept it, until the $2 mark, because usually that's the big resistance points, the dollar marks, and in this case it didn't quite get there, but it did after hours. But or actually that following morning. And then here's the major gap up. So this would be something else I'm gonna watch, because let's see, now going into the next trading day, let's go further out and see when the okay, there we go. So for this one, major resistance is going to be probably right here, 293. You could probably see a gap all the way up to $3 on this one, EKSO. Depending on if the momentum stays. This is the next step. But you look at this gap. So if the bulls don't win, it will gap back down to 153. So, and this is on a weekly basis too. So that's showing it a little bit broad. Okay, I guess I shouldn't have done it on a weekly because that's a broad of a range. Well, let's see what the resistance is going to be here. Looks like first level resistance is going to be right here, 267. Yeah, 260, 267, 268. Let me see something. Now, if you wanted to play this, just for a swing or something and playing the gap up, I would definitely call the first level resistance. Yep, 268. And I usually just put drawings in here. That's first level of resistance right here because of the gap. So once again, this is EKSO, the 208 breakout, which was the high of the day. The major resistance had happened in pre-market, and then during the trading day, it went up. First resistance based upon the gap to me is right here at 268. Mind you, this is contingent that the volume stays, which you can really kind of determine during pre-market too. You can see what's happening during pre-market and create a support and resistance off of there, and kind of create your own strategies. But these are not really for long-term holds. This is really for kind of just a momentum, get in, make some quick profits, and get out. Because to me, that's the name of the game. For the challenge, that's exactly what I'm trying to do. I don't like holding swings. I'll typically hold swings if I feel confident into the end of the trading day that you're seeing the staircase to heaven type, or an ascending triangle with a major gap up, things of that nature. I would try to, or if I see a reverse candle that was in a downward movement from a doji with news at the end of the day. I don't know. I mean, there's some indicators that might let me hold for swings, but and I'm referencing challenges because I have different accounts for different types. I have the one I'm going to be working with for this YouTube account is going to be the challenge, which is Stock Trade. I think I'm going to be using that one. I mean, I know I'm going to be using that one to get around the PTD rules. And then after that, I do have separate accounts for long-term swing trades. But for the most part, I think for the challenge account, I'm going to be doing the momentum plays because I feel they're consistent and they're quick gains, and that's the name of the game. Because 8% on $100 is only $8. 8% on $1,000 is only $80. 8% on 10 grand is 800. So I mean, it just adds up. And the thing is, you just keep a set number in mind and a goal. You know what I mean? With the challenge, I'll be happy if I get $50 the first week. In 5 trading days with $1,000, if I make $50, I'm happy. My goal, I mean, hell, I'm happy if I make $1 because I'm green, but I just don't want to be red. My goal is gonna be, I'd like to say 100 to 150 for the first week, but as long as I'm green, I'm happy. You're gonna have bad trading days, and you just can't, let them get to you. You just gotta shake it off. So, just a quick 30-second summary of this. I scan charts, change it by percent changes. Filter out the or not filter out, but just mentally block out the reverse splits and no news movers. I don't play no news movers because you don't really know, unless it's like shipping Friday, in November. Then I'll play the shippers. And you kind of have an idea of what sectors are moving that day, so you kind of want to do that as well. And okay, so and then once I find the ones that I want to play, I just right click on them and just go straight to the chart, and I'll look for news, see if I have any news on them. And if I do have news, what kind of news is it? If it's just a press release from a seeking alpha writer, or not press release, but an article that is just an opinionated article, I might not treat it as serious if it was an FDA approval. So, and then also volume. You want liquidity, so you have volume in the trade, in the market during pre-market. That's going to give you confidence that the trade should pan out. No chat. Perfect. Alright, so that's all I'm going to say for this. So if you guys have any questions, just post in the Facebook group. Otherwise, I will see you guys in the morning.